What if I told you over $2.3 trillion is just sitting still inside the US financial system? Not invested, not circulating, not stimulating the economy. Just parked. And the silent freeze could explain why markets feel strange, why banks are tightening, and why something bigger may be building beneath the surface. Today, we're breaking down the hidden money shift no one is talking about. After the pandemic stimulus surge, trillions flooded into the system. But instead of flowing into loans, businesses, and expansion, a massive chunk is now sitting in bank reserves, reverse repo facilities, money market funds, high-yield savings accounts. This is what economists call liquidity parking. Money exists, but it's not moving. And when money slows down, the economy slows down. Banks are being cautious. Higher interest rates from the Federal Reserve make borrowing expensive. Consumers are spending less. Businesses are delaying expansion. And banks are protecting balance sheets after recent regional bank scares. So instead of lending money out and taking risk, they're holding it safely. Safe but slow. When liquidity dries up, three things usually happen. 1, asset prices become unstable. 2, credit becomes harder to access. 3, economic growth weakens. Historically, liquidity contractions have preceded slowdowns. This doesn't mean a crash is guaranteed, but it does mean something structural is shifting. Big money is defensive, and when big money gets defensive, pay attention. The Federal Reserve is trying to fight inflation by tightening financial conditions, but tightening too much can freeze credit markets, stress banks, trigger recession. So now they're balancing inflation control against financial stability, and that's where uncertainty lives. This shift isn't about panic, it's about awareness. When money slows, be cautious with debt, prioritize liquidity, avoid over-leveraging, watch credit conditions closely. The system isn't collapsing, but it is repositioning. And those who understand liquidity cycles move smarter. $2.3 trillion sitting idle isn't random. It's a signal, a quiet repositioning of capital. And in finance, when money moves silently, that's when the biggest shifts are forming. If you want more deep breakdowns of hidden financial shifts, subscribe, because the next quiet move may already be happening.